Welcome, everybody, to the Sunday night strategy session for July 26, 2015. As I am looking at the markets right now, you can see we're basically flat to up a little bit in the S&P 500 futures. Last week was, definitely took me a little bit back because I figured we would come up, consolidate a bit, and then break through the highs. Didn't know if we would get through the highs last week, but I figured we'd have a nice consolidation at a maximum. But instead, rolled over here and accelerated here on Friday with this big candle down here. Now, there are a couple of things that are coinciding for the start of this week with potential buy signals, but what we have to really keep in mind is, number one, will this just continue to dip down, get bought, come up, and get sold as it's been doing for the past 6 months? Not quite, maybe more. Actually, if you want to catch this, will we continue to stay in the range, or will we finally get a break out of the range to the downside? Now, one thing that we have to consider if we are looking for that quote-unquote downside break is, are we putting a top in on the market, or are we just getting a deeper correction than what we've been seeing as of late? So far, the deepest correction this year would have to be this combination, including this little two-step combination down here that started back in May and came down to the July lows because of the zigzag pattern. So if you count this whole thing as the retracement, that's the biggest one of the year. Okay, and you have something like this too that also can be considered potential of that type of size. But I mean, right now we're seeing a lot of things that are not sitting well with Paul and I, with the way the market is trading, differently than the past few times we've started to pull back. So that tells us that maybe we're finally in store for a deeper correction. I don't believe that there's a new bear market brewing. I don't believe Paul believes that this is the bear market starting, but of course he'll have his own opinions in just a couple of minutes. But that doesn't mean that we can't get a deeper retracement than what we've seen. And what do we do off that deeper retracement? Is that going to be the buying opportunity of the year? Are we going to be able to overcome a deeper retracement and just power off to new highs into the new year? We'll see. But for now, like I told everybody in the inner circle, we are at a decision point right now. This is a decision point, and that
I'm so serious.
And that decision point is further or bouncy. Right, we're right here in the middle, and look where we are right here. I mean, I'm using the futures, but you could see it with the SPY too. If we draw this line right here, we're basically cutting the middle of this range. Don't mind all this other crap. I'm just messy and don't want to change it to a regular line. There we go. Whoops. So we're really just cutting in, come on with this. So we're really just cutting in the middle of this range right here. So it's good enough time as any to call it a decision area. Let's do the job numbers. Okay, let's do the economic reports. Monday, core durable goods. Tuesday, CB consumer confidence. And Wednesday is the FOMC statement. What are they going to do at that FOMC statement, Paul? Raise, lower, nothing.
Well, that's a question, or are you making a statement?
Both. What do you think
okay.
they're going to do? I think they're doing nothing.
Absolutely nothing. It's not even a debate.
Okay, great. Thursday, unemployment claims, advanced GDP. And then Friday, just some orange numbers. University of Michigan, Chicago PMI, employment costs, blah, 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 blah. Remember also, we are in the worst 6-month period of the year. So there is some seasonal backing on some downside here. But again, so far, I guess if you sold in May and went away, if you timed it right on the push up in May, you're happy. But are you thrilled yet? I don't know. So the sell in May and go away still remains to be seen here. That's it. I'm going to turn it over to Paul to go much deeper into the indices and the sectors and to see what he's uncovering. But really, in my opinion, we should know something sooner rather than later here. So that's it. Turning it over to Paul. Wish I had more insights, but I don't.
Oh, sure you do, Mike. You're like the king of insights. No comments? Okay, no comments. Good. Good evening, everybody. It wasn't long ago that I said, boy, you guys are all going to be wishing for the quieter days of late 14, early 2015. And now that volatility is, I don't want to exaggerate and say blowing out, because it's not, volatility is not blowing out. So, but certainly the VIX now is, 14. I'd feel more comfortable if the VIX was 18 to 20. So we're not there yet. We have a little bit of volatility here. By historical standards, this is nothing more than regular market action. So take a step back for a minute and recognize that the moves we're seeing now are what we should be seeing every week. And volatility although once the QE started, I was always a big fan of it. Once it started, I didn't agree when it started, but once it started, I liked it. This low vol, suppression of vol, is a consequence or a benefit, if you will, of QE. QE dampens volatility. So now that QE ended and we still have a big balance sheet, there are some challenges the market's going to face. I'll reiterate my high-level comments to begin with. I do not think the bull market ended. Although it's really behaving poorly. I don't think it's over. I don't think this is, kind of quote in quotes the big one. But I do think it's the biggest pullback we'll see. So we've seen so far this year, and probably equal to last year or so. A lot of the market trades really poorly. So let me spend some time talking at both sides of my mouth. On the one hand, the internals are deplorable and abhorrent, and it looks terrible. But on the other hand, the market's not down that much from their highs, and given how bad the internals are, prices held up, I'd say, fairly well. So why don't we dive in? Let's start in a different direction tonight. I'm going to really shake it up, guys. Let me shake it up. Hold on a second. Johanna, where are you that it's so hot? It's hot in my office. I'm in my office in the house, not at my office in my office. It's kind of warm in here too, but I have a little sunburn. So, no, it's not where I want to start. I want to start here. So, can anybody make any observations? This is the New York Stock Exchange Advanced Decline Line. Can anybody infer anything from this? You can post it in the question window. What do you think? Okay. Oh, Johanna. Okay, yeah. It's not hot. I mean, it's humid here, but it's not gonna be hot up here until I think Wednesday or Thursday. Um, let's see. Yeah. This just says that beneath the surface, things kind of suck. The Dow made its last all-time high right here. We had a nice divergence, and the AD line is sold off dramatically. Let me say this to you, my friends, not in a condescending or arrogant way, but you have to rise above all the nonsense that you're hearing from the pundits. That the bullish pundits will tell you that this AD line you can ignore because it's made up of too many non-common stocks on the NYSE, too much closed-end bond fund garbage. Well, guess what, folks? When the closed-end bond fund leverage garbage really sells off, they're selling off because of an anticipated problem down the road, either economically or more likely that rates are going up. Never ignore. Don't question why the AD line is weak. Just recognize that it's weak and it's got to get fixed, or else the bull market's survival will come into question. Here's the NDX, and look, it wasn't long ago. Let me see. When did the NDX make a new high? Was it this week or last week? So the NDX made a high, well, not an all-time high, but its last high was 1 week ago on Monday. All-time high. Guess what? That was here. So the NDX AD line has its third lower peak. I mean, you don't have to be a genius to know, because I'm not a genius by any stretch of the imagination. I did graduate high school, though. You look at the big stocks. Netflix, boom, looks beautiful. Apple, not so much. Google, boom, kind of sort of beautiful. Amazon, kind of sort of beautiful. That means they're all blowing the upside. But look at the rest of them. Microsoft, nowhere near highs. Cisco, nowhere near highs. Intel, rut-row. So the NDX is really being held up by a few stocks, just like the S&P is, and that is, what's the word I'm looking for? That is symptomatic. You know, I'm 49, and as I've gotten last couple of years, sometimes I pause to pull out the word I'm looking for, whereas it used to just flow into my mind. So this kind of narrowing of the rally in the S&P, in the NYSE, in the NDX, this is all symptomatic of a bull market that's in its fourth quarter. A bull market that I still think is going to go to 20,000, but oh, what the heck was in my hair? You've got a narrowing of the rally. Okay, so you've got NYSE looks crummy, the NDX looks crummy. I can't understand why my NASDAQ AD line stopped working. Let me look. Shoot. NYAD. Let's just try NAS. Oh, there we go. So here's the whole NASDAQ. I'll do it quickly. So here's the whole NASDAQ. Looks like the NDX. Looks kind of crummy. Okay? So we do not have broad participation from the troops in the battle. The generals are still fighting, but the troops have gone home. So now we know beneath the surface things kind of suck. Let me just check out one thing. I forgot. I don't know if Tiny mentioned it. Let me see if it happened. The trend closed at 145. No, that's not really instructive. All right. So what's happening right now after hours? Absolutely nothing. The S&P and the NASDAQ after a huge day on Friday are doing absolutely nothing. Let's dive into the indices. Excuse me. So here's the Dow. It continues to fall in this large range since November. I did a blog a couple of times where I thought this line, this blue line, was going to be severely breached, and we likely correct down to Dow 16.8, 16.9 down in here. I'm still not ruling it out. So stochastics rolled over, and I don't think Friday's decline was the end. Although let me say this, there's certainly enough indicators showing short-term oversold. My view is there's going to be a sharp snapback. Is it going to start tomorrow? I would bet against it. I'd say probably Tuesday, Wednesday, or Thursday. But a sharp snapback is coming, and I believe that snapback is a rally you could sell into rather than buy. All right. Here's a Dow. They're all going to look similar. Here's the S&P. Looks very similar, a touch stronger. But ultimately, I think the S&P is coming well below the 2015 lows, possibly under 2000. Okay, but we'll see in the next couple of weeks. I think we're going to build towards a really good low this quarter that sends us on a nice rally into year end, I think. But let's see how we get there first. The mid caps, not so good. They look weaker. I don't think I own any mid caps. And for full disclosure, I own a little bit of S&P and a little bit of Qs. I sold my Qs. I think I was relatively smart. I sold my Qs up in closing on Wednesday, I think. I got a little bit of Qs and a little bit of S&P, and that's it on the index front. Oh, and I have some Europe. Sorry, but we'll get that in a minute. Here's small caps. IWM looked really good up in here, right? And then this is the pattern that I worry about most in the markets. When you make a high, you decline, you make a lower high, and they cut them loose. All of the big declines that I've seen in the markets have this kind of pattern. But it happens more often than they have a big decline, but all big declines have this kind of pattern. Last gasp rally, and they cut them loose. So IWM, I think we're clearly taking out the 2000 and the March lows. Can we take out 15 lows? It's possible. Europe, which I own a little bit of, frankly looks crummy right now, and I think this gap's going to get filled sooner than later. There's nothing really redeeming here. You've got little double top, don't really care about that. This I don't like. You have a decline, you rally back, you can't hold the decline, you can't hold the rally, they cut them loose. We've rallied again, and now they're cutting them loose again. So that would portend, the 50 area. And eventually they may just cut Europe loose. It'll be interesting to see what happens if Europe begins to unravel the stocks. Will the ECB increase the size of their QE? Question mark. EEM, emerging markets, are right at the lows. They look awful. I think I told you guys last week that in all likelihood, if China and Hong Kong continue to rally, I would sell them, which I did. I no longer own China, FXI, bye-bye, and I also sold Hong Kong. I've sold those both, I think, in the middle of last week on Wednesday, if my memory is correct. So I have absolutely zero positions in emerging markets. Let me just pause and look at, there's a bunch of comments and questions, so hold on a second. Oh boy. If rates start to go up, what happens to stocks like Goldman Sachs? If rates start to go up, it's really not, so it's not Goldman per se, it's no, not KBE, it is KCI. It's not, KIE is insurance. What the heck is the, hold on a sec, Luis. Oh, KCE, that's what it was. Capital markets ETFs. If rates go up, forgetting about this decline, if rates go up, I think it's bullish Goldman, because their interest margins will get a little better, but it's not as bullish as the regional banks. The KRE it'd be really bullish for, at least in the short term. Question for you about analysts. A buzz about how much the oil reserves are going to explode with Iran coming. Nah, I don't buy that. Iran's going to come online. Oil reserves. Iran has been pumping oil. It's just sitting in oil tankers and in storage facilities. So I think the Iran thing is already baked in the market, in the oil market. And I think Iran's going to end up selling their oil to Russia and I think Iran's going to sell some natural gas to China, and that's going to be a little bit of a stick in the eye to Russia, although Iran will buy some missiles from Russia and all be copacetic with the lunatics of the world. Let's see, diversion, selling money. Take a look at, JN, I know, I follow this. JN wanted me to look at the S&P versus the equal weight S&P. I know it well. It's not doesn't have a great track record overall, meaning when the S&P is leading the equal weighted S&P, market's not in good shape, only some of the time, but clearly this is not healthy behavior that the S&P cap weighted is leading the S&P equal weighted. That means the generals are doing really well and the troops are sucking wind. I agree with you. Any significance that the XLY is stronger? Jay, yes, I've been saying it for days, weeks, months, and quarters. That overall, except for last year when I was negative on the XLY, this tells you the consumer is not dead. Rumors of the consumer's demise have been greatly exaggerated. The consumer is still, looking at the XLY, in pretty decent shape. That's an intermediate term positive for the market. Let's see. Oh, JN said, oops, my error. Oh, well, you made a good point, JN. It wasn't an error. You were right on. You could do the same thing about the Qs. Q. Hold on a second. QQQ versus QQQ equal weighted. Qs are stronger than the equal weighted, which again means that those few stocks, Amazon, Google, I forgot what else I pulled up, are much better than the overall market. Your point is valid, and I agree with you, JN. What level of snapback for the S&P, Robert? Let's see. Well, here's the daily chart. Not going to really help us. Let's go to a 65-minute chart. So we've now almost filled this gap, and we have one gap left, which I believe will be filled. Where could it snap back to? I don't know. I mean, maybe 212. So what's that? 2% higher? Not even. It could snap back further, and I probably won't change my view that I don't think we bottomed on Friday. Let's see. Hotel stocks. Hotel internet sucks. Scott. Hotel internet sucks. Oh, Scott, I gotcha. Hotel. You're in a hotel and the internet sucks. Yes, sorry about that. Japan, a sell now. Curtis, was that DXJ? Okay, there you go. I don't know what DX was. Yeah, I mean, I've owned Japan for a couple of years. Probably not going to sell it. Here, it does not. It looks like it's going to pull back some more. I mean, I'd imagine that this low is not the low, and we've had that. What I fear most, this kind of failing rally, and probably we take out this low, in August. So I agree with you. Whoops. Let's see. What will the rate hike do to floating rate funds like the Eaton Vance? Johanna, I own this fund, the Guggenheim Floating Rate Fund, for people like my grandmother and really much older clients, just as a hedge against all the other bonds they own. So floating rate funds should be okay if rates go up, as long as we don't have economic weakness. So floating rate funds are supposed to do well with higher rates, as long as that we don't have an economic problem. Johanna. A lot of red bars on the consumer, Tracy. Oh, on the XLY? A lot of red bars. Yeah, just recently. I mean, listen, the XLY could go down 10%. I'm not going to change my view. I mean, it's very tired. I think, Tracy, you meant to say they're really tired up here, and I'd agree with you 100%. XLY is tired, and it needs a pullback. But I don't think the bull market just ended there. Okay. May, can you look at Google this week? May, I don't really cover stocks in this session. I mean, that's Tiny's expertise. You're welcome to, if you're in the inner circle, just email Tiny. I'm sure he can help you out quickly. Okay. So let's forge ahead. We just covered the indices. They don't look great. They look like you could sell a rally. And we covered Europe, and we covered emerging markets. Any questions on any single countries before I forge ahead? Any questions, single countries? Joanna, you always ask for EWK. Looks better than Europe. I think we talked about this before. It looks better than Europe, but I don't like this action here, that we snapped back and we couldn't make a high. But it hasn't pulled back that much, so I clearly call this one of the stronger countries. China, I covered. I blew out mine. I have no China position left. I don't think this is the low in China. I think maybe I'm early in my sale, which is more than likely, but I think ultimately when China gets back online to letting stocks trade, that it's going down 10 to 20%. Philippines, I just covered China. Philippines, which I used to own, probably sold it poorly. No, I didn't sell it poorly. Here, I mean, it does not look supremely bullish. I'd probably say I'm neutral to a little bit bearish on the Philippines. You know, stochastics is overbought. We have a little double bottom here, which looks nice, but it's got to make a new high above here, probably in the next couple of weeks, or else I think you just fall back and make new lows on the Philippines. South Korea, somebody wanted, and that is an unmitigated disaster right now. It's to definitely bounce sooner than later, but there's no constructive behavior in EWI, South Korea, yet. Brazil, which is EWZ. God, I remember, I forgot one of you guys, maybe it's not in this group, but somebody used to always argue with me that Brazil was going for like 100 or something. I said, it may, but it's just not behaving well. Wow, it's terrible. I mean, you're oversold, and it could support a bounce, but I'd want to see a little more constructive behavior before I would get bullish on Brazil. Let's see. I didn't even know this is a new ETF for me. NORW. Globex. Oh, it's Miski Norway. So this looks a little better than the other ones to me, because you've got some support down here. You've got a little reversal. You're closing the gap. I mean, this one I put on my list for a long. I wouldn't buy it tomorrow, but I would keep an eye on Norway. I didn't even, thanks for sharing that one. I didn't know there was a Miski Norway. I arrived late. No, I did not go over gold yet. Current weakness in China also helped bring down the U.S. markets. Absolutely, Robert. Depends how bad it gets in China. But for sure, if China becomes another route, yes, I think that they cut the U.S. loose too. And lastly, we'll do India, which when we started doing these things, I used to love India. I had a huge position in India, and then I cut it loose, and I have no opinion on India. I think it's a pair of twos if you're playing poker. So nothing I can glean yet, Tracy. All right, let's go to this. Oh, I'm getting late. Smartly, I showered because I had sunblock, and I took my little guy to play golf, and then I took my daughter to the field. So I ran in and showered. So you guys would have to smell how awful I am right now. Well, I get some water 1 second. All right, let's go to the 3 key sectors. Transports, quickly, looks awful. Stochastic's rolling over. This low is not going to hold. We're going down in transports. That's not a great sign. We said it for a while. Not a good sign. Stocks, oh boy. Stocks looks awful as well. Breaking down again. You know, gun to my head, I think we're probably going sub 80 in the stocks. So it's not trading well at all. There's no leadership there. Concerns me. And the banks, say something I said last week. You know, this may be a double top. I don't know. I don't really care. I am a buyer in the week. So if we get back down to the 34 level, which is still a pretty good decline from here, I think banks are a second half of the year story. I'd be all over, the KRE or the KBE, or if you find some regional banks on your own that look good, I think you can attack when the market bottoms. So the sectors, 2 look awful and 1 looks okay. Hard to get bullish on the sectors, key sectors. Hard to get bullish on the indices. Software sector, even with Microsoft trading poorly, it still looks all right. All right, it's fine. Not so good here in the telecom. Now, this is a 50-cent scale, not a full-point scale, but it looks really awful. And one of my sector picks for the year, so I look kind of stupid, but what can you do? It happens. Second half of the year story for me in telecom, but not a bullish-looking chart. Let's see. Diversified financials. Look a touch stronger than the banks, but still, and I still think they're a second half of the year story. So another one you could look at when the market bottoms. We did XLY. Here's XRT. The retailer is definitely weaker than XLY. So not one I want to look at right here. I think it's going lower. I think we're going to break these lows. You've got some pretty good momentum to the downside. Stochastic's opening up, just getting down to 50, and you're probably putting in play the 2015 lows, which could be another 7 to 9% lower from here. XRT, XHB, the builders, which I do like for the year, they're hanging in really nicely. Rates are going up, and the housing data is no bargain, but it's okay. Energy, man. XLE collapsed this week. I did not think XLE was going to collapse this week, especially since the OIH was hanging in much stronger, which I still own a small piece of OIH. Interestingly, OIH is stronger when it shouldn't be, so I take mental note of that. Here's 2 that we've talked about for a while being off, negative or awful. XLI looks terrible, awful, and going lower. There's nothing redeeming here. XLB we've hated all year and is absolutely getting taken to the woodshed. So far, not a lot to be excited about on the sector front. Defensive side, XLU, which I still own, is hanging in. Does not look great. This cannot be the low. If we bounce first, I will probably sell half or all of my utilities. maybe get out around, who knows, but could be a little head and shoulders bottom forming here, sloppy, but I don't like this. Thursday's action and Friday's action was crummy and not a really exciting chart. XLP came back to all-time highs, but still is under a little bit of pressure recently. I think it's a pair of twos, best case scenario. Oh, and REITs, which I own a little piece of. Trade's okay, but no world beater. Trade's okay in the short term. This is still crummy action, intermediate term, and but for more than a trade, I wouldn't touch it. So we've had almost nothing really bullish. Healthcare, which I continue to own. Going into Friday, I said, geez, healthcare has really been immune to the selling. Nice tight consolidation. Boy, maybe we can get one more pop to new highs and sell into the new highs. And then on Friday, the market said to me, no shot. You're going to go home along with this loser from Friday. They're still the leader, healthcare and biotech, but Friday's action hurt. You got a gap just above, and I think you probably continue a little bit lower. It's kind of same as in biotech. The consolidation up here was not as tight. I'm down to a half a size position in biotech and healthcare, and if we do bounce earlier this week, I will probably sell half of my half to be left with a quarter. So the sectors don't look so good. Gold stocks, I bought some Friday because gold's been absolutely obliterated. Everybody's negative, blah, 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 and you're finally getting some bottoming action. Sentiment is the worst it's ever been. It looks awful. You have a really good reversal Friday. We need to see follow through. At some point in the next couple of days, we need a good 10% rally to close this gap and then see what happens in gold. But the early stages are there for a reversal. The junior miners look better to me. I'd rather own GDXJ. Gold, a commodity. So I've said this all along. Sub 1100 has been my target, and we did get sub 1100 this week. It started last Sunday night. So we've met my initial target for the third quarter, but it doesn't mean I'm hopping on board gold and metal. I don't think it's bottomed yet. Although now all of a sudden people are coming out and saying 1,000 is the next level. There's no intermediate term stopping point. You're getting really negative sentiment in gold. So I would not short it now. I'm looking for a buying spot in gold and metal. Silver, my target was sub 1,400 on silver. We're not there yet. I do think we will get there. And also, I think you got a very big rally coming in gold and silver. Is this the bottom to go to new highs? I don't think so, but I'm happy to play along for a couple bucks. Copper rolled right back to new lows this week. Sentiment is awful. I don't want to touch it yet, but be on the lookout for bottoming action in copper because sentiment's low and price action's been throwing the baby out with the bathwater. Natural gas, kind of the same. It's been a disaster. It's been frustrating. Smart money has been long from back in here. And this is how a commodity really bottoms. This kind of action. Long, drawn out affair. So natural gas, you should look at it all the time. Eventually this thing's going to bottom and it's going to take off. Crude oil is trading stronger than the stocks, which is the exact opposite of what you want to see. You want to see OIH resist any selling, but it's not happening now. Has crude bottomed? Doesn't look like it yet. I don't think it's going to 30, but it's just trying to hang in so far. I think there's probably a bigger selling day coming in crude. Bonds. Obviously, with stocks being under pressure, the Treasury bond market is rallying. This is not exactly bullish behavior, but you can't ignore it. To me, it's a pair of twos. Could go either way, but I'm not interested in playing it either side at this point. Junk bonds, one of my favorite canaries in the coal mine. Here's JNK. Looks absolutely awful. Awful. It's almost getting to the point of being so bad that it's good. Here's what I recommend looking at on JNK or HYG. Let's go to iShares, HYG. Okay, get the hell out of here. So here's HYG. Why did they move this? Where the heck did they move? There we go, premium and discount. Right now, HYG closed at 87.50, and the net asset value was 87.42. It essentially closed at fair value. Okay, that means the bottom is not there yet. Usually, you get at least a 0.5% minus 0.5% discount before it bottoms. So we're not there yet, getting closer. Okay. Don, it said there's no Don, you have no sound? He says you're muted by organizer. Hold on a second, Don. Don, I think you're just muted from talking. I don't think you're muted from sound. Let me see. Don, there you are. You have a question? No, everyone's muted, so you can't talk. But you should be hearing sound. Oh, sounds good for you, Peter. Don, if Tiny's here, I'll have him private message you. All right, let me just hop through the commodities and I'll go to questions. So here's, we just covered junk bonds. Here's the Pimco high yield fund. Looks better than JNK, but still no world beater. Not a lot to write home about tonight. It's bullish. Let's see, we did bonds, we did stocks, let's do the dollar. So the dollar, has rallied gently, but in the grand scheme of things, it's been in a trading range. Now, the S&P is outperforming the Russell all of a sudden. What happened to all the bulls who said, in a strong dollar, the multinational companies are hurt, and the S&P can't rally, and only the small caps are going to rally? I told you guys at the time, ignore those pundits because they don't do their homework. And there's no statistical significance of the dollar rallying and small caps outperforming large caps. It does not hold water. There's the dollar. Looks fine. Still bullish long term. I think it's going well above the old peak. Here is the euro. Looks like it's just consolidating before another leg down. The yen, same comments I've made for several years. Short any rally because it's going much lower. That's my opinion on the yen. No more to be said. Let's see. All right, let me look at questions and we'll finish with grains. Oh boy. Okay. Brian, do you think Ron Paul and the other Senator on TV trying to sell their doom and gloom books on U.S. market? No. Brian, I think most people realize Ron Paul is a joke. Sorry, but he is. He sold his soul to some ridiculous infomercial hawking their nonsense gloom and doom. The world only ends once. It didn't end in '08, and it didn't end in 1929 either. So I do not think it will cause a panic. I think their gloom and doom is total bogus nonsense based on speculation to sell newsletter subscriptions. Tiny and I talk about it all the time. If I could get behind some of these really negative scenarios, I think we could sell a lot. But the fact of the matter is, I don't believe it. I think the Dow is going to be at 50,000 before you know it, and it's going to be 100,000 in our lifetime. Hard to sell gloom and doom scenarios that way. How about I cover the GDX for May? Which sector looks good, Paul? Nothing looks wonderful, May. Although if I had to own stuff for longs, I traffic in the financials, healthcare, and biotech. If gold snaps back to 1150, 1150 on gold snapback, Robert. So that's back to here. Yeah, it's possible, Robert. That's not that big of a rally. It's a 2-day rally to get back to here. So I think that's possible. And then I think the GDX would snap back. Yeah, we're on the same page. I'm not going to tell you I think it's going to happen. I think it's certainly possible. Why is a stronger dollar and low energy prices not good for VPU? I don't know what VPU is, so I apologize. Oh, it's XLU or VPU. Okay. So James, low energy prices may be good for utilities, right? Because they use obviously energy. Here's why it's not. If the dollar is getting stronger because the economy is getting a little stronger, which means that rates are going to go up, interest rates compete with utilities. People buy utilities for the yield as like a quasi-bond play. So if rates are going up, it means that the notion is that people will sell their utilities and buy some, insert here, junk bond fund, TLT, something else that has better yield. That's the rationale. Adine asked a great question. Do I think energy is skewing junk? The answer is absolutely. My buddy Casey, who runs a credit fund and ran a junk bond fund for all the big banks except for Goldman, said that the energy and metals junk bonds are in disaster state. They're in collapse. There's no bids. There's no activity. So it's absolutely skewing the junk bonds. But you can't dismiss it because they're too important in the junk bond market. Okay, let's see. Don, you can't hear me, right? Don, can you hear me? Okay, you got it now. Good. XLU I covered. The Euro I covered. Gavin, Gavin, I don't know where you should put the stop in GDX, but my stops would be at new lows on a close, which is a long way away, which means you got to be able to withstand a lot of volatility. Tracy, yes, I am bullish the dollar. I have been since the first quarter of 2008. PD, what's the symbol? I ask this every week. I got to get it right. What's the symbol for uranium? I don't know. URA. Okay. And what do I think about CLF? I don't know. URA. Oh my God, it keeps going down. Every week you guys ask for, I think, uranium in it. I mean, I wouldn't touch it yet. It looks like oil and gold. Trying to bottom, but not there yet. CLFs. Same. Well, I mean, it looks like they all look similar. Something I wanted to. Oh, I know. I didn't cover that one or two. Some of the secondary ones. The FDN looks really nice, or looked really nice. This is the covered it every couple of weeks. You know, this is another leading. Whoever asked me for leading sector, here's another one, the internet sector. I mean, I would not go up and buy this up here, but I put it on my list. If it pulls back sub 70, you need it long. Look here, social media, not anymore. That thing is taken on the chin. I would not buy social media. I hate this. If it rolls over anymore, you're probably going to 18 in the social media ETF. And TAN just has been a disaster since that Chinese company pre-announced earnings right here. So I have no interest here either way. Oh, Tracy, thank you. Tracy asked about Russia, which I've said since December. If you weren't smart enough to buy it here, then I wouldn't chase it up here because I thought it closed the gap into resistance and then begin to roll. I have no interest in buying Russia. I think it's going to go lower before it goes higher. Now, maybe, Tracy, on this next decline, we bottom between 12 and 14, and that's where you can take a shot. But for me, I wouldn't take a for my money. I won't take a shot with Russia yet. Hanson, I covered XHB, and actually, Hanson, if you wanted my real opinion on XHB, I wrote a blog about it. So here you go, Hanson. Invest for Tomorrow blog. Here's a whole write-up on XHB. Investfortomorrowblog.com. Let's see. Okay. So let's finish up with the grains and the tropicals. And boy, was it a big week in the grains and tropicals. So here's wheat, which did look pretty good over here. Little pennant that just fell out the bottom. Would I touch wheat this week? No. I wait for some kind of reversal, which is not happening yet. It's amazing how fast, when you look at sentiment, people got so bullish in here. So what happened last week? The bottom fell out. So in corn and in wheat and in soybeans, if you want to take a shot on the long side. But I wouldn't do it just yet. I'd want to wait for reversal. Sugar had been a disaster. It's still a disaster. Like natural gas, taking a long time to bottom. Cotton, I don't really have an opinion on cotton. I think it's, if I had to lean, I'd say you probably get some upside this week, but nothing that compelling. Cocoa has bucked the trend, and it had a really nice rally. Sold off this week on dollar strength. Wait for a reversal if you want to take a shot on cocoa. And the Starbucks commodity coffee looks a little weaker than natural gas, but this is how a commodity bottoms. So if you don't want to buy coffee, you can short Starbucks instead at the appropriate time. But I think coffee is going to put in a pretty good bottom at some point. Is following the COT report useful? Yes, James. I think the COT report is the only, you have to follow it if you trade commodities. Just keep in mind that over the last 15 years, they've changed who qualifies as a commercial, a large speculator, and as a non-reportable, meaning the mom and pop. So it's hard to compare periods anymore. What a shock, because they wanted to screw you a little bit. But yes, I think it's essential to look at the COT report. All right. I've droned on for a long time, and my liter of water is running out. Last call for questions. Gavin asked, do I ever look at the weekly chart of the AD line? So I'm going to go out on a limb and say that none of you know the secret of the weekly AD chart. Does anybody know it? The secret of the AD chart. Nobody. Okay, the secret is the weekly AD chart made its all-time high. I think it was like 1953 or 1963, and the weekly AD chart has never been back to that high again. So that's why I don't think it's valid to follow, because it hasn't made a high in like 50 years or more. Nick, I don't really analyze stocks. That's a Tiny thing. So if you want to email Tiny, if you're in the inner circle, I'm sure he'll give you a pretty thorough answer. Yep. Last call, folks, ladies, gents. Last call. It's gonna be a fun week again. I'm supposed to do 5 Fox Business this month, but we had some snafus, and I'll leave it at that. But I will be on Thursday night at 6 o'clock on Fox Business, the Charles Payne Show. What about IBB, Nick? I own it for full disclosure. It trades well. Had a crummy day on Friday. I think if you're looking to own it, I'm not going to short it because I own it. But you're welcome to short it against me. No offense taken there. I just think you got to wait for a deeper pullback to buy it if you're going to buy the IBB. Yeah, I think you got to wait. I think a deeper pullback is coming. Anybody else? Last call. All right. Thank you all for coming. Hope you got at least one decent tidbit out of what I had to say and what Tiny had to say. And God willing, we'll be with you next Sunday night again. Same time, 9 o'clock until probably after Labor Day. Then we'll go back to 8 o'clock when it gets a little darker. So have a great week.